Today we're going to be talking about a stock that is up over 200% in the last year, and that is Nvidia. In this video, we'll take a look at their most recent earnings announcement, as well as go over an interesting article that talks about what it would take for Nvidia to reach $1,200 again. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. As I mentioned in the intro, Nvidia is a stock that is up over 200% in the last year, and over the course of the last 5 years, it has ran up over 3,500%. But what's even more impressive is they continue to run up in a significant way. Even in the last month, they are up almost 40%, and in the last week alone, they're up almost 10%. And this large move up of 40% in the last month comes on the back of very positive earnings. They reported their earnings back on May 22nd and came through with an EPS number of 61 cents per share, which beat analyst expectations by about 10%, and their top line also beat analyst expectations by 6%, reporting revenue of $26.04 billion. And what's most impressive for Nvidia is the year-over-year change that we are seeing in their numbers. Revenue of $26 billion is up 262% year-over-year. Their data center revenue came in at $22.6 billion, and that is up 427% year-over-year. GAAP earnings came in at $5.98. Keep in mind, this is before the 10-to-1 stock split, and that was up 629% year-over-year. Non-GAAP numbers came in at $6.12 per share, and that is up 461% year-over-year. As I mentioned, these EPS numbers are before the stock split. So the number that we just looked at on Google was 61 cents per share. You have to take this non-GAAP EPS number and divide it by 10, because they did a 10-for-1 stock split. When you do the math, you'll get the 61 cents per share that you're seeing on Google. One of the things that has personally worried me about Nvidia is how large of a percent data centers make up of their total revenue. Again, data centers alone is $22.6 billion of their $26 billion in revenue. That means that data centers makes up about 85% of their total revenue. For me, this is a little bit of a concern. However, for the CEO of Nvidia, he is not concerned at all. He had the following to say about AI. The next industrial revolution has begun. Companies and countries are partnering with Nvidia to shift the trillion-dollar traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence. AI will bring significant productivity gains to nearly every industry and help companies be more cost and energy efficient while expanding revenue opportunities. I want to highlight 3 key phrases here from Nvidia's CEO. The first being new commodity. He's referencing artificial intelligence as a commodity. That is something that everyone will need and use on a regular basis throughout their everyday lives. And this is very strategic wording from him because he wants to show the importance of artificial intelligence and how integrated he believes it will be in everyday lives in the future. The second is that every industry he believes will be using artificial intelligence. This means that it's not something that is only for tech companies. He sees that tech companies right now are the forefront of this industry. However, in the future, there will be a lot more companies coming to Nvidia and be interested in the technology that they are providing. So right now, they're really just penetrating that major tech market. However, in the future, they have a lot more customer opportunities for them to expand their business. And finally, expanding revenue opportunities. This shows the importance of artificial intelligence and how it can actually benefit the businesses that use it. And you can see some of this at work in their highlighted partnerships. They're working with TSMC to actually produce Nvidia's chips, but more importantly, you can see some of the companies that they're working with. AWS, Google Cloud, Microsoft, Oracle, and then even down here, I found very interesting, Johnson & Johnson. This shows the wide application of their technology and what they're providing, and how artificial intelligence will not only affect large tech companies, but could even affect things like pharmaceuticals. And Nvidia expects their growth to continue at least into the next quarter. They provided a revenue estimate for the second quarter of $28 billion. The question mark for me personally is how much of this growth is actually priced into Nvidia's stock. And I think this article highlights a lot of key points that need to be considered, especially now now when thinking about investing into Nvidia. And this article goes over what would it take for Nvidia to 10x again to reach a price of $1,200 per share. But keep in mind, a lot of things have changed since Nvidia went up 10 times in the last couple of years. The first being the fact that Nvidia now is sitting at a $3 trillion valuation. For them to 10x again, they would have to hit a market cap of $30 trillion. And right now, this may seem insane, but Apple from 2010 to 2022 went through a 10x period where they went from $300 billion in market cap to $3 trillion. So over a 12-year period, they saw a 10x in the growth of their stock price. $30 trillion seems like a crazy market cap, but I remember when I first started investing in the stock market back in 2018, Apple was just under $1 trillion, and people thought it was insane that a company would reach a valuation of $1 trillion. But looking at Apple today, over the course of the last 5 years, it has gone all the way up to a $3.2 trillion market cap. But what exactly are the numbers behind a move like this? That is a very important question, and this would require a compound annual growth rate of about 28.5% through 2030 for the entire AI market. This would take roughly 9 years for Nvidia to reach a stock price of $1,200 again. There are two key assumptions that are being made around this prediction. The first is the obvious one that compound annual growth rate will hold through 2030. That can be very difficult because we have seen a lot of growth in AI in a very short period of time, and for them to keep up this growth rate would be very, very outstanding. However, I don't know if it's realistic. And even if that growth rate does hold for the broader AI market, it may not hold necessarily for Nvidia, because right now Nvidia has an 80% market share of the AI chip market. That gives them a ton of pricing power and helps improve their overall margins. However, if we start seeing competition coming into the market like Intel and AMD, that could start bringing down prices. But an even bigger threat may be companies like Alphabet, Microsoft, Amazon, and even Apple building out their chip manufacturing to be more competitive and vertically integrate their businesses. And all of that could actually play into the second assumption, that Nvidia will maintain its current valuation. If we start seeing their growth rate coming down, their valuation will tend to follow suit, especially if there's competition coming into the market and their margins start getting affected. That will drive down their valuation in a significant way, which ultimately will affect the stock price. And right now, Nvidia is trading at a little bit of a rich valuation with a forward P ratio of a 50.76. A lot of value investors look at a 60 forward P ratio as the target to where companies can no longer outgrow their valuation. So only time will tell if Nvidia can get back to $1,200 per share. But for now, analysts do expect the company to grow at a significant pace. In 2025, they have an average EPS estimate of $2.71, and for 2026, the average EPS estimate jumps up to $3.60. So personally, I'm not looking to buy into Nvidia. I think that the valuation, in my opinion, is a little bit rich right now, and there's a lot more downside potential than there is upside potential. But I do keep saying that over and over again with this stock, and it just keeps going up. So don't listen to anything I say. Don't listen to anyone on YouTube. Make decisions for yourself. But I do want to point out that I do see a lot of similarities right now between Nvidia and Tesla a few years ago. Tesla ran up, they did a stock split. There were a lot of articles written about how Tesla would go back to $500, they would go to $1,000, they would go to $3,000. And then the margins started getting hit for Tesla, and we saw their valuation drop, we saw their stock price drop in a major way. And I think that that's something that could happen for Nvidia too in the future. I'm not saying in the next couple of months, but maybe in the next couple of years, we could see some issues with the company and potential pullbacks in the stock price. But as I said, don't buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, how did the pirate get his ship for so cheap? Check the comments down below for the answer. Thanks for watching.